And it's another trading day right here in Lagos, Nigeria. Time to take a look at how your money is performing at intraday and check the stories that set your agenda. Coming up in the next 25 minutes. COP28 delegates reach a consensus in Dubai to move away from fossil fuels by 2050. South African inflation cools on softer fuel prices as consumer index rises annually by 5.5% in November, above estimates. And the US Fed will announce its last interest rate decision for 2030, widely expected to keep rates on hold. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how major markets we track in Africa, looking at intraday, starting on the African continent. Now we see the NGX, just like yesterday at intraday, positively up, but marginal, 0.07%. And we see South Africa again at intraday down, but this time also marginal, 0.06%. The EGX 30 starting another bullish move. Seeing that intraday is up already 1.96%. Wondering how that's going to close. And we see Kenya closing Tuesday down 0.09%. Still below that 100 points for the all-share index at 93 points there. Let's take a look at what's happening in the Middle East now. With markets we track there, we see it's mixed sentiments right there. In the UAE, Abu Dhabi index is down 0.15%. Dubai index marginally up 0.03%. Other markets we track in the region, we see the Saudi index down 0.34%, while the Qatari index is up 0.14% at 9,740 points. Let's get a check on what's happening in London now. We have some data out there in the UK. Juliana joins us now from our London studio. Great to have you, Juliana. So data from the ONS shows the UK economy, according to an early official estimate, shows a contraction of about 0.3%. That's quite a surprise.
Good afternoon, Laddie. Yes, it is quite a surprise, although I think economists were broadly expecting a contraction. I don't think they're expecting it to be that much, a 0.3% drop in the month of October across all main sectors. So that's manufacturing, construction and services. Services, of course, really a key component of the UK economy because it contributes 80% to GDP. But hey, you know, we are going through a cost of living crisis. In fact, that's exactly what's being debated at the moment in the Palace of Westminster during PMQs of Prime Minister Rishi Sunak trying to bat away questions about the economy. But that really has been the story of, his political tenure this year, because at the beginning of the year, he said he was going to grow the economy, and all the indicators suggest that that's not going to happen. I think a lot of people this morning did breathe a sigh of relief because it doesn't appear as if we'll end the year going out in a recession. But still, I think kind of stagnation and flat growth is not good enough. And of course, we've already seen these warnings from the OECD, the Paris-based think tank, and even the International Monetary Fund. So I suppose now, a lot of people are saying, what happens next? How do we come out of this? Because consumers are afraid to spend. I think the good thing is early this week, we did have another set of data from the ONS looking at the labour market. Unemployment remained unchanged, but growth in wages, which is a good thing, 7.3%. I say good, depending on how you look at it. But it does show that perhaps, there is more money in people's back pockets. If there is more money, people are, of course, going to spend. So let's just wait and see, as we always say, those famous words. We are in the golden quarter, the fourth quarter. It is Christmas. We are just a stone's throw away from the busiest shopping district in the country. People are out, people are spending, but is it going to be enough to finally get Britain out of this slump? Because if you look at comparable economies, we appear to be doing so much worse, even including Russia, and we know that they're heavily sanctioned at the moment.
Right. I guess it's quite normal to be afraid to spend when there's a cost of living crisis at the moment. But hopefully there's something to spend, this Christmas. But looking at the BOE now, the Bank of England is set to hold interest rates. That's according to consensus. But there's also chatter about rate cuts in 2024.
Well, of course, I think everybody is looking at whether or not interest rates are going to be cut because they're so far above anything that we've experienced in recent history. We have to go back very, very far to see, interest rates at 5.25%, especially because it's taken place over such a quick time. But the reason why the Bank of England, of course, are doing this is because they want to bring down inflation, which has remained stubborn. We're not at the double digits, which we were at in the beginning of the year at 11%, but it's still quite high, just hovering over 6%. So the Monetary Policy Committee, Laddie, they are going to be gathering tomorrow for the final decision of interest rates in 2023. Now, the past two gatherings, the MPC have agreed, not unanimously, to keep the rates unchanged at 5.25%, and that's because the cost of living crisis, the critical component of that in this country at the moment is high mortgage rates, high renting for people because landlords are putting up the rents because they're paying through the nose for their mortgages. So it is a huge issue, the cost of borrowing. We are starting to see other countries, comparable economies, lowering interest rates. Are we going to be seeing a lowering tomorrow? Definitely not. But I think, it has caused some food for thought that wage growth, excluding bonuses, is growing. Perhaps that is going to put a dent on inflation. Again, we shall just have to wait and see. We don't have the crystal ball, Laddie, but the UK economy pretty much stagnant, and we're not expecting box office from the Bank of England tomorrow.
No box office, and I guess consensus is a hold at this time. But looking at the markets in the UK at this time, is it red or green?
The markets are green, Laddie, just about. The all shares up 0.31%, FTSE 100 up 2 at 0.34%, and the FTSE 250 is up by 0.30%. I hope I'm reading the correct data. In currencies, the British pound is trading down against the US dollar by 0.43%, though down against the euro by 0.24% and down against the Japanese yen by 0.10%. That's quite interesting reading, actually, because, of course, the UK GDP figures actually did push down the British pound at early trading, but it does appear to have grown through the day.
Right, definitely. Juliana always gives us the right data here. Thank you so much, Juliana. Always great having your update.
Thanks, Laddie.
All right, let's take it on to Europe now. In Europe, fashion label Zara is under fire after its latest ad campaign sparked protests and even called for a boycott of the brand. Lars Holters with Deutsche Welle and joins me from Berlin. Great to have you, Lars. So what can you tell us about that campaign?
Yeah, thanks for having me, Ladi. Well, it was a marketing campaign that was likely only offensive if you wanted to see it that way. Zara's ad campaign for its latest Atelier collection featured mannequins with missing limbs, like one specifically with no arms. There were statues wrapped in white. Those photos appeared on Zara's website, right on the homepage. Now, one picture specifically went viral on Instagram and other social media sites. In it, a model is pictured carrying a mannequin wrapped in white cloth. Now, critics said all these mannequins resembled photos of corpses in Gaza. That's a connection you can make, given that Muslims bury their dead in white shrouds instead of a coffin. So it's clear why some people can take offense here. There were thousands of comments online. The hashtag boycott Zara went big on Twitter, or I should say X. The issue was also trending. As for Zara, they say the campaign has nothing to do with the conflict in Gaza at all. And that is actually kind of plausible. The pictures were taken in September, and that was a few weeks before the war between Israel and Hamas even began.
Are companies generally more careful about their advertising so as not to offend customers?
Yes, definitely. We're living in an environment where people are quick to analyze whatever they see and react to it. And through social media sites, anyone being offended and calling for a boycott can have their message get out really fast and far. There's been a few examples as of late. Italian label Balenciaga ended a campaign that featured photos of kids that were seen as inappropriate. And the marketing agency behind the campaign actually established the position of a brand safety boss to oversee all ad output and make sure brands or clients are protected. And then there's Italy's Dolce & Gabbana. Their campaign a few years ago also featured models. They actually struggled in those photos to eat typical Italian food with chopsticks. That was seen as racist. And who could forget, of course, the disastrous cooperation between Adidas and Kanye West. He was given a boot after he also made some anti-Semitic comments, and it cost Adidas millions to get rid of branded merchandise they didn't want to sell anymore. The problem here, of course, is some brands, and especially in the world of fashion, are pushing the envelope on purpose. After all, you want to be seen, you want to stand out, and often being more provocative than others can give you an advantage. But if you step just a bit too far, the whole thing can come apart.
All right, well, what are investors looking at in today's markets in Europe?
Well, we talked about it for the past 2 days already. This week, it's all about the Fed in the US. Even markets outside of the US aren't moving much before the central bank comes together today for its final interest rate policy decision of this year. Not much is expected, however. Most experts say the Fed will likely leave rates untouched, but everyone is waiting for the Fed statement that goes along with the rate decision, and that could give us an indication of what will happen in 2024. Up to 4 rate cuts is what many on Wall Street expect. For now, let's see what we're getting, and as I said, until that meeting in a few hours, markets are really just biding their time.
All right, thank you so much, Lars Halter, giving us the details from Europe. Thank you. All right, now let's take a look at what's happening with Asian markets now. We see China's stocks led declines among Asian Pacific markets today as investors looking at Beijing's plans to boost domestic demand ahead of interest rates decision from the U.S. Federal Reserve. All eyes on those rate decisions coming out from the U.S. Then tomorrow we're looking at the BOE, but we see Asia there, the Nikkei up 0.25%, but it's mostly red on the screen at this point. Kospi down 0.97%. HSI index there also down 0.89%. On the markets we track right there in Asia, it's also mostly red. Shanghai 1.15%, but we see the ASX 200 in Australia, that's in the green, up 0.31%. So those are the markets looking in Asia. Let's take a look at what's happening in the U.S. now. So U.S. stock futures ticked higher as investors await the Federal Reserve's latest policy decision. We see Dow Jones Industrial Average futures up about 42 points, about 0.1%. 37,000 points for the Dow Jones Industrial Average, and we see the S&P 500 futures, that's up 0.11%. Tech-heavy NASDAQ is actually the biggest mover right there, 0.14%, 16,598 points. Well, let's get a summary of yesterday's close from our correspondent, Maria Bird.
It closed up on Tuesday as the Dow Jones and the S&P 500 had its highest day since January of 2022. The Nasdaq also closed up at 0.6% up. It is clear that investors are watching to see what will happen with the Federal Reserve's meeting on Wednesday. It's expected that it will show a slowing down of interest rate hikes. We could also be looking forward to next year having potentially decreases in interest rates. The most recent inflation reports show a steadying out of inflation in the U.S., which is good news for many investors. This means the U.S. economy could be on its way up sooner than many believed.
That's our correspondent there, Maria Bird. Now, let's take a look at what's happened to oil markets now. Oil prices are steady today after falling by more than 3% to a 6-month low on oversupply and demand concerns. Brent crude futures for February rose 16 cents to about $73.40 a barrel. US WTI crude futures for January, that gained 20 cents, about 0.3% to $68.80 81 cents a barrel. The market stumbled in overnight trade as firmer than expected U.S. inflation readings for November bolstered the view the Federal Reserve was unlikely to cut interest rates early next year, which could weigh on consumption. And for the first time, the Conference of Parties, that's COP28, have a consensus to move away from fossil fuels. Let's hear more now from our environment correspondent, Ayola Kasim, joining us all the way from Dubai. Great to have you on the show.
It's nice to see you. Well, I've been moving from one end of the conference arena to the other.
I know you've been really, really busy there. But so now we have a consensus to move away from fossil fuels. What next?
Well, everybody is angry. People are not excited about it. It's not, they will even tell you it's not enough, that the language is weak, saying that we should move away from fossil fuel. The language is weak. Samoa, they sort of, they were not there when it was agreed, but when they came in, they made a big deal out of it. And from the reaction of people to it, it was obvious that people still feel that, though they mentioned fossil fuel for the first time in 30 years, the language is weak. They said false party, but they are hoping to see something like, parties must or parties shall, something concrete. That's what they were looking for, but that is what is lacking. And also finance, for instance, Nigerian minister, he just addressed the plenary in less than 15 minutes ago, and he's saying that there's nothing for us. Like they're asking us, they're saying that there should be a phase out, but there's nothing substantial in the financial mechanism that is in the outcome, and they're not excited about that. Remember, Nigeria, we are fossil fuel based, and then they're hoping that something will be done in Baku next year, that's in Azerbaijan, and then hopefully before 2025 in Brazil, something concrete will have been done. We will be packaging our nationally determined contribution also.
Yeah, definitely a lot to look out for. And at some point, we're all hoping we can move away from fossil fuels, because just the temperature here in Lagos alone, when it gets really hot, feels like over 40 degrees at this point. But thank you so much for giving
Science says it's going to be hotter. Sorry, I had to put it there. I have to put that in.
Right. Thank you so much for the update there. Definitely, we'll keep tracking and see how they meet up with all these pledges. That was our correspondent there, environment correspondent, Ayola Kasim. Thank you so much. All right, now let's get a quick check on gold prices. Now, see, they edged up today, buoyed by weaker treasury yields, but the bullion was still at its lowest in over 3 weeks, as the dollar inched higher ahead of the U.S. Federal Reserve's interest rate decision and policy outlook. Spot gold gained about 0.2% to $1,983 per ounce, while the U.S. gold futures that rose 0.3% to $1,999. The dollar index rose to 0.1%, making gold more expensive for other currency holders, but falling. U.S. 10-year Treasury yields lent some support to prices. And according to a report by SB Morgan Intelligence, between 2019 and 2023, the cost of medication like anti-malaria, antibiotics, painkillers, and common cold medicines have gone up about 1,000% between 2019 and 2023. If you pull up the data there, you see some of the prices we tracked there, and we'll see that price of paracetamol, we'll see the price movement there. It's gone up about 400% between 2019 and 2023. You can pull up that data for me, and you see there pharmaceutical inflation in Nigeria. We're seeing antibiotics have recorded the highest price increase there between 2019 and 2023. About 500 milligrams of Ampiclox capsules with costs. We see the cost price rising about 1,300% there. So big moves. How do we navigate all of this? Joining us now is Samuel Okwoda, CEO and co-founder Remedial Health. Great to have you on the show.
Hi, Ladi. Thanks for having me.
Fantastic. So this year alone, price of most routine medications have increased by over 200%. That's this year in 2023. Commonly used drugs like anti-malaria medication, we've seen about 300% up at this time. How do we navigate all of this? Is this just inflation and currency devaluation at work?
It's a combination of things, right? So this year in Nigeria for entrepreneurs, we've sort of seen back-to-back blows from cash scarcity to presidential election to deregulation. So all of this has an impact on the price of medications. Also, global events also have an impact on the price of medications in Nigeria. Today in Africa, we import 80% of the medicines we consume from India, from China, from other countries, right? And the other 20% are raw materials that we still import from other places to then sort of put together in Nigeria. So you can simply say 100% of the medications we consume are imported. So what that means is, for example, when there was the Russia-Ukraine war, when that started and the price of metals went up, that affected the price of medications in Nigeria. The cost of moving products from one place to the other, petrol prices. So at Remedial, where warehousing and logistics for pharmaceuticals, we distribute to all 36 states in the country, right? And we literally saw the price of logistics move 3x, literally in a week. Now, money to cover that has to be found from somewhere. So it ends up getting passed on to consumers, unfortunately. And again, because we import pretty much all of our medicines, it depends on the dollar naira price, which today is 1,240, 1,250. That would also reflect in the price of medications. We as a country are also making some decisions that are sort of, we're shooting ourselves in the foot. So for example, we import all of our medications. We do want to get to a point of sustainability where we produce these things in Nigeria. But for the time being, we can do some things to alleviate the pains, right? Where our customs today is now a revenue generating agency that is giving targets to meet. What then happens is the price of clearing products at the port also goes up. And we have seen this internally, where we would import anti-malarials into the country, and a year ago we would be paying maybe 8 million naira at the port for duties and every other thing. Today we can't leave the port without paying 15, 16 million. Again, wow. We have to pass that on to consumers. So it's a combination of things, also including multinationals leaving the country, and leaving the country with some major brands. So you talk of Augmentin. Every Nigerian knows Augmentin, right? Every Nigerian knows Ampliclops. When they leave and they take out all these brands, you then begin to have parallel imports. So people who are bringing in these products from other countries, maybe Ghana, Egypt, they're not registered with NAFDAC, but they're able to import them into the country to sell. They would then sell at a markup because they've gone the extra length to try and get those products into the country.
Right.
So it's a combination of
yeah, Samuel, quite a picture you've painted there at this point. But looking at things right now, what would you say are some short-term moves that we can make, as a government and as a people, to actually navigate all of this? Because it's getting really expensive to get sick. It is already very expensive.
Exactly. To get sick. We pretty much see data. So we work with about 7,000 pharmacies across the country, right? So we see purchasing data because they buy their products through Remedial, and we're able to see how they make those decisions. People are now making decisions on medicines that are life-saving, that they shouldn't be making. So you hear someone say, I'm diabetic, I can't pay the 80,000 naira it will cost me now to buy my medication, I'll just wait at home. And everyone knows that, hey, if you have diabetes, you let it fester for a while, you begin to have other complications. And people are choosing that, hey, you know what, I don't have 80,000 naira to buy the medicine, I'll stay in my house. If anything happens, then it's God that wants that for me, right? So, short term. One, we need to recognize, as much as we want to move to a point of sustainability where we are producing these things in Nigeria, the fact is, even if the government gets serious about supporting the industry to do that today, it will take at least 5 years. Pharmaceutical plants are not things that you just drop and they go into operation immediately. They take some years to develop. So short term, one, can you relax the duties on medicines? That would at least help to alleviate the costs of clearing these things at the port. Easily, that would take off as much as 20-25% of the cost of these medicines at our port. Again, I'm not saying, hey, do this and forever we'll just continue to import. No, it can be phased, where we're saying, you know what, for the next 1 year, let's relax the duties on medicines and let's get these essential medicines into the country. Let's get the industry to import more of these things to help reduce the cost. The more, it's economics. The more supply we have, the less the cost will be. But for now, what you have is Augmentin is out of the market. If I'm an importer and I import the generic of Augmentin, I can increase the price of mine because I know that, hey, you probably not be able to find Augmentin.
So much to unpack there, and definitely this will be a conversation we'll continue having here, because we need to get prices of medicines down as much as we can. Thank you so much, Samuel Korda, CEO, Remedial Health. Thank you so much for coming on the show. Yeah, so just before I let you go now, South Africa's inflation slowed amid a sharp decline in fuel prices, although other categories remained elevated, sending mixed signals to the central bank, which is cautioned it remains wary of ongoing cost pressures. Data from Pretoria-based statistics, South Africa shows the consumer price index rose 5.5% in November. That's for South Africa. So that's the show today. Thank you so much for watching. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our productions. You can also visit www.channelstv.com for more updates. From me and the team right here at Channels HQ, it's bye for now.